Mr. Faber, how long do you think the global economic slump will take?
Well, I think we had a build-up to this crisis as a result of very strong credit growth over the last 25 years, and now we had an unprecedented collapse in credit growth and an unprecedented collapse in asset markets. In other words, stocks, real estate, commercial properties, commodities all slumped. And I don't think we'll come out of this crisis anytime soon. I think we may stabilize because the economy fell off a cliff in the last 3 months, and we may stabilize at a lower level here. But until we really see a sustained recovery, I think will take years.
Mm-hmm. And what are the consequences for a small open economy like Belgium?
Well, I think that for Belgium, the consequences are obviously not particularly favorable because Belgium produces also capital goods, and tourism will suffer, the financial sector has suffered, and so forth. So, I mean, Belgium is in the same boat like everybody else. We are now all part of a global economy, and the economy here will obviously not be good for quite some time.
And what do you think about the valuations on stock markets in Europe and US?
Well, in the US, I don't think that equities are inexpensive. They fell off a cliff. In other words, we fell by around 50%, and we can easily rebound here somewhat. But if I look at long-term, let's say, indicators, then inflation adjusted, we're still relatively high. Or if you compare, say, the US to Japanese stocks, the Japanese stock market is at about the same level as it was in 81. If the US would just decline to the level of 1990, it would have to be cut by another 50% right here. So overall, I don't think that US stocks are terribly inexpensive. But having declined so much, there is some rebound potential before we go lower. It's like between 1929, we fell very dramatically, rebounded into 1930, and then dropped another 80%.
Mm-hmm. And the same story goes for Europe?
Well, European stocks probably are somewhat better value than US stocks, but again, I don't think that that's inexpensive given the dismal outlook for corporate profits.
Mm-hmm. And do you have a positive message for investors?
Well, the positive message is obviously that everything has become much cheaper. So if you have $100 today, you can buy more assets, more stocks, more real estate than, say, 18 months ago. But it doesn't mean that you won't be able to buy even more in a year or 2 years' time.
Mm-hmm. Okay, thank you very much.
My pleasure.